Johnson & Johnson out with second quarter results just a little bit ago this morning. And joining us right now to break down the numbers is J&J's Chief Financial Officer, Joseph Wolk. Joe is also a member of the CNBC CFO Council. And Joe, welcome. Numbers better than anticipated and raising guidance for the full year. So what happened that the street wasn't expecting in this quarter?
Good morning, Becky. Pleasure to be with you. We started the year beating expectations with our guidance, but we had a qualifier around it of being responsibly cautious. Right now, the qualifiers are off. We're humming across all of our business lines, 7.5% operational growth in the quarter, earnings growth of better than 8%. And it is broad-based. In pharmaceuticals, we see tremendous progress and continued results from products like Tremfya for psoriasis and Darzalex for multiple myeloma. But I'm really encouraged by some of the newer contributors to our performance. Tecvayli for multiple myeloma, Carvykti for multiple myeloma, as well as a neuroscience drug. Coming out of the pandemic, we all know how important mental health is. We have treatment-resistant depression product known as Spravato, which is doing extremely well. In medtech, 10% growth, again, broadly based, good stabilization of surgical procedures. Electrophysiology, which is ablation for AFib, and heart arrhythmia, is actually performing at 25% in the quarter. Surgical procedures and instruments are up about 8%. And vision continues to do very well with market-leading contact lenses and intraocular lenses. And then our consumer health business, we had a lot of news, obviously, in the quarter with that, but they continue to keep their eye on the ball, performing better than 7% growth. We did have the successful IPO back in May, and this morning we announced our intention in terms of the next step with that separation. All in all, it gave us the opportunity to raise guidance by 10 cents, but I would say there's more to meets the eye there, as the beat or the guiding raise is really about 28 cents when you consider about 18 cents for two discrete strategic items, one being the non-controlling interest in Kenvue, which is worth about 8 cents. And then we made an investment to secure our future for B-cell malignancies, establishing our pipeline with an agreement we did that was worth about 10 cents. Most of our peers take guidance down for those types of events. Yeah. Our business was so strong that we were able to absorb it.
Well, that's what I was going to ask you, because you're only raising your guidance on an adjusted earnings per share basis by 10 cents, even though you just beat by 18 cents. So yeah, that really takes these other things into account. So you're taking the qualifiers off. You're saying things look really good for the rest of the year?
Things look very good, yeah. And what I like about the quarter is, while we did really well from a financial perspective and strong performance, we had a lot of good clinical and regulatory data that's going to solidify the next few years in the second half of this decade. So we're in a very strong position as we see the second half of the year.
You just joined with other big pharmaceutical companies in suing the federal government for Medicare being able to negotiate drug prices with the drug companies. Would that change the outlook for you, the picture for you, if you lose that lawsuit?
We're so broadly based that, yeah, it would have an impact. The basis of the suit, though, is what we're objecting to, like the Chamber of Commerce as well as other industry peers, is really the assault on innovation. I think it can be credibly argued that the U.S. leads in terms of advancing life sciences, providing important cures and therapies for better living. And the guise of negotiation is really that. It's really price setting. A recent report was just issued that 85% of Americans have access to new medicines when they come out. That number should be, quite frankly, 100%. But you compare that to some countries like France and Canada, that same percentage drops to 43% and 21%. So this is bad for patients. And then the financial side of me actually has to question the inflation reduction that's part of this law. If I think about last year, whether we were filling up our gas tanks or going to the grocery store, we were looking at least at 10% cost increases. Pharmaceutical pricing actually went down. We just issued our 6th annual transparency report. Prices in Johnson & Johnson pharmaceuticals went down 3.5%. That is emblematic of the industry overall. And that's 6 consecutive years now where we've had price decreases. So we think that the discussion's misplaced. It's not going to reduce inflation. And I'd argue, given the advances that we're having in life sciences across the industry in important areas like neuroscience, oncology, immunology, it's actually going to add cost to the system.
Joe, no argument that Americans want access and they want innovation. I think the problem is Americans feel like they are paying for innovation for the rest of the world. If you look at it, no citizens of any country pay more than Americans pay for drugs. I think it's an average of $1,200 a year for the average American, what they're paying right now. And that's the pushback. I get your point about how we have access to much better things, but that's what the other side will tell you, that they need to find a way to address that and not feel like they are paying for innovation for the world.
I appreciate your pushback, Becky, and actually glad you brought it up, because if you look at over the last 6 years since we've been issuing this transparency report, the average industry discount and rebate off of list price was about 25%. Today, it's north of 55%. Yet patients are going on an annual basis to their pharmacy and paying $75 to $100 per month for copay when they used to pay $10 or $15. Insurance premiums are going up. So, in short, it's not the innovators or the manufacturers that are raising prices; it's the middlemen.
So the insurance companies, or I mean, who is it? Is it the insurance companies themselves that are saying no? Is it companies that are raising the copays?
The companies themselves are not raising the copays. It's more the providers.